Hi, welcome to the Market Alert for Tuesday, the 27th of June 2023. So value is outperforming growth as bonds and Bitcoin slide. Very, very quiet it is. That's certainly reflected in the implied volatilities. Up yesterday though. US stocks were mostly lower amid big tech weakness ahead of quarter end. Amazing how the narrative changes overnight. Big tech losses rather weigh on the market ahead of month end. Any other news today? Yes, we've got the criminal out. Lagarde is speaking at 9 a.m. Durable goods from the US at 1:30. Then 3 p.m. we've got consumer confidence and new home sales and manufacturing index out as well. So a bit of news out today, all medium impact apart from the CB consumer confidence at 3 p.m. So the markets will be open at that point, i.e. the Dow, cashed out in particular. So we'll wait and see what happens there. But let's have a look at yesterday and we'll kick off with the Dow. So in the Dow, we can see yesterday the market trading down to this 78% retracement and also the 50 EMA there, market holding a bit of an increase in volume and then making its way back up on the overnight market at the moment. In the 30-minute chart, choppy session, market down in the first part. You can see there trading down to Friday's low. Then making its way back up, Dow opening, and then absolutely selling off, right back down to, guess where? The low. Where does it bounce from? The low. And then they brought the market back up, came back to the close, and it was just choppy thereafter. Overnight, nice and steady, making new highs with each successive bar at the moment in the 30-minute chart. So looking quite optimistic there at the moment, and above the DP as well. So you want to look for yesterday's high as the first upside target, which we've got there. Also in between this, and this is the same for any market, we're going to have an 89% retracement at 33,807. And in the German DAX yesterday, very interesting picture. The market trading down to 89% retracement that we drew in at 15,714. Guess where the market traded to? I'm going to show you this in smaller time frames actually. Is the 5 minutes is 714, market down to this level. You can see there it says 712. So first of all we get the market selling off down to this area. We then get a bounce up to the 20 bar moving average and also the psychological area before we come back down to the psychological level on the downside, back up to the psychological level on the upside. And when it does this, we'll just grab this and we go from there to there. We will see we came back to 78% retracement as well before we had the shakeout down to this level. And the reason I'm showing you this, and just a heads up as well, I will be changing the market alert from next week. And what I want to do is, you can see from the previous market alerts that the profits are consistent. I want to show you the techniques that I'm using in order to do this, and you can apply that to any other market then. And let's face it, most of the charting packages are free, that you could still see these or mark these areas up on if you so wished anyway. But yeah, like I say, I want to get more into showing you how to actually reduce the risk down to pennies or a few points. So if we looked at these areas, we know that, again, by starting with the daily chart, we know the 714 is an 89% retracement in Fibland. There's your 30-minute chart, but again, you can't reduce the risk because the market over 30-minute moves sharply. But by going down to a 1 minute, you can reduce it dramatically. It's what I call the Russian doll approach to trading. You're all familiar with those. There's a small doll inside a bigger doll, etc. And that's the same by looking at the time frames. And you can see there at the 7, this is 15,715. And you get the increase in volume. We've got divergence, we're oversold. And then you can just move in and take the trade. We've already got a crossover beforehand in the stochastics. And the same thing here. Notice how the volume sticks out. We're oversold. and then you can get in there and take advantage of by risking a few pennies and just having the stops below these areas. And that's what I've been doing. The same on the upside as well. So yeah, it's like I say, call it the Russian doll approach to trading, and I'm going to spend more time on actually highlighting these major areas, and then again with the techniques, how you can actually just get in there and reduce the risk. And you can do this to any market with these techniques. It's not just confined to the DAX. It's just I happen to be very fond of the DAX, and once you get used to the personality of a market, you can preempt. It's like I've said for the last week or so, the market at the moment likes to sell off first thing. There's the odd day, but 8 or 9 times out of 10 it will sell off, find support, and then come back, and that's precisely what it did again yesterday. So going back to the daily, we can see the market starting to move up, needs to close above yesterday's high, and also the 5 MA and the 30-minute chart. You can see coming off the low yesterday and heading back towards the high as well. It's in the gun sight, as it were, so don't be surprised if we have a run to that at 7 a.m. and then they bring the market back, and then they go back again. That seems to be the pattern at the moment. And speaking of trades, let me just get yesterday's. So yesterday's trades, only 89 profit. I was busy, and I'm busy at the moment, just adding stuff into the software. So I didn't do as many as I would normally do, or give it the attention that it deserved. There were some great trades yesterday as well. Nonetheless, £89 to add to last week's nearly 700 and 66.33. But like I say, I want to focus more on this type of stuff in the alert, and how you can minimize the risk in the trades, etc., by using multiple time frames, and highlighting when the pros are in and taking the trade with them, etc. Okay, let's move on and have a look at the S&P. And in the S&P, the daily chart, the market trading down to 62% retracement, and again, choppy session, kicking off to the downside, moving up and then selling off, and then making its way back up there to the DP, looking a bit weaker than the Dow at the moment for the broader market there. The DP needs to close above that level if it is to move higher. FTSE 100 taking out the low to the left yesterday. We spoke about this during yesterday, the 7439. I need to go to the weekly chart to see what's really going on, and we're down to a 62% retracement. We had the all-time high, we came back to the 78.89, and then we've moved lower, and now we've double bottomed here. So again, don't be surprised if the market attempts to move to the upside. And in, like I say, the daily chart, we're already marked up on the upside, having tested that 7439. In the currencies, GBP, GPY, we're still moving to the upside. Monthly charts, again, you can see we're heading to that 89, having taken the 78 out. So moving up sharply there. Yesterday was sideways to lower, but longer term still looking at that 89. 30-minute chart for yesterday, choppy on the downside, then brought back down a bit overnight to begin with, and now making our way to yesterday's high there. In the pound, we're at 38% retracement on the downside from this green line to the red line at the top, pull back. And again, we've got a double bottom inside of the daily chart there. And also we've got the targets for the upside as well. One of the things I'm having changed in the software is to get rid of these horrible Sunday night little dots that, as I said before, absolutely irritate me. So everything will be a nice smooth pattern for the daily chart, and it's a lot easier to see the targets and where the market's likely to go to as well. 30-minute pound, you can see they're trading up to the 200 MA and making its way back down, and then sideways, choppy, making its way back through the 200 currently, which will be stuck at a fib retracement from there to there, as you say. 78.89 is where it's currently trading. Needs to hold above that level. US dollar down yesterday, as can be seen there, So let's move on to the metals, and we get a bit of a bounce, starting off with silver, moving back to the upside and up on the overnight. So I was completely wrong about yesterday, giving it another slam. But don't hold your breath, because they'll take advantage of that when they can. Yesterday the market sideways to higher. They did still give it a hammer in at lunchtime, as they normally do when they do the London fix, but moved up nicely overnight on during yesterday morning. Well, from the overnight session, morning session, electronic session, and the same thing going on there at the moment, already above the high. Meanwhile, gold struggling a bit, still stuck in the sideways range. But then the monkey hammering that silver got during last week in my absence, no surprise really. So gold making its way in a bit of a coiling fashion sideways, and the 30-minute chart again moving up, but they really slammed this. But then no surprise, because as I've said before, the central banks are accumulating gold at record levels, so they need to keep the price suppressed. They certainly needed to get it below 2,000 an ounce, and they did that with no effort whatsoever. When you look at the monthly chart there, you can see them bringing the market back off that 2,000 level there. And see, they don't want it to stay above 30 minutes for gold, as we just said, moving back up on the overnight there. And in the gold-silver ratio, you can see the dramatic fight back in the silver market there, with the gold-silver ratio moving back to the downside there. Okay, that's it for this one. Let's see how the market performs today. Got a bit of news. So not a lot to move the market to the downside. The old Russian situation that we spoke of yesterday came to nothing. And but the good thing is it created some nice volatility and some nice trends intraday as well. So that was good. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.